Oh yeah, no problem. Nice headshot. I like your headshot photo. Mm. So I'm sure Ken can speak to this and kick it off, but we play Cashflow. We play the board game by Robert Kiyosaki. Have you heard of that, Dustin? No. Yeah, that sounds good. Yeah, I'm going to be sharing my screen and doing more of a show than tell. Um, but before I kind of take over the screen, let me just talk about my background in mathematics and finance. I worked with actuaries, um, and I'm deeply grateful for the lessons and the low stakes mistakes learned with Ken and Leo in the cash flow game. It's really upped my knowledge and wisdom. And part of what I'm going to show you is the evolution of learning about money. I almost feel like I'm a 13-year-old when it comes to how money actually is transacted for value. But I've used technology to aggregate big data, the news, crawling opportunities like real estate and looking at various approaches at calculate, the calculus for the stock market and things like that. So let me share the screen. Can you see my screen? Okay, cool, thanks. Um, so again, like I'm just going to start with telling you about myself. I have this little visual I did in Notebook LM, which is a cool tool that helps you create things like this. So I'm a part of a church here, a startup church, and then we have these weekly cash flow events with Leo and Ken. I have a contract with the VA where we do like Fitbit, Apple Health, Garmin, and predict health risk. And then that's sort of at the tail end of that whole complex. And then also sort of at the front end of it, doing some mapping and visualizations of ships and stuff like that. Um, and then in my personal ventures, I wrote this over the last 10 years. I've been writing about AI. I started 10 years ago writing about the difference between natural and artificial intelligence and the thoughts of what would happen if computers could go through stages towards sentience. And that series, I call it the Survitality series, and it ends in um, it ended recently. I finished the series recently, and then so that's Paradigm Publications, and then IntegralMass I will be showing today, which is an opportunity crawler. So, and then I part of this coalition where we are starting an actuarial program at the University of Arizona, um, and then we're also starting a chapter of a group that teaches AI literacy. It's here in the East Valley. It's called AI Trailblazers. That's my sort of community outreach. And then I'll also be showing today a tool that I wrote that scrapes 1,500 articles a day and extracts the event codes to try to correlate movements in the markets with the actual events in the news. And then finally, sort of using APIs to try to sort of predict fires to prevent fires. Um, that's just about what I'm doing right now. So let me get into this. Feel free to stop me anytime. And could everyone go on mute? I can hear somebody in the background. Okay, thank you. So let me take it back to the beginning. All of my things can be found at jefferson.cloud, and it's sort of a cloud of interrelated links. But under projects is all my open source technology that you can come pull the code and use the tools. I've made it very accessible. And risk runners is sort of the risk management, which is going to be a heavy focus today. Is looking at risk, how to approach risk. And just from the beginning, I want to point out the easiest way to learn the standards in risk. I've created this tool. It's called Street Math. The Street Math, and it's these little screenplays of formal risk analysis approaches like bow tie analysis, decision trees, Monte Carlos. They're little like street math, like street scenarios to make it kind of fun and practical to learn mathematics. And with AI nowadays, you can literally say, "Hey, I want to do a decision tree. Go use this link, which is available to everyone, and apply the decision tree analysis because it's all explained in this very practical like screenplays." So let me pull back out a couple levels now and show where a lot of this started was me writing natural language processing again about 10 years ago, where I thought the paper boy is underrated. I want to scrape the news every day and provide a news service. So I went to the boardwalk in San Diego and got uh, 50 emails in 3 days. And I just said, "Hey, are you tired of fake news? Well, let me get you news that's exactly tailored to what you care about." And they would write down a list of keywords. And it forced me to, take care of, 50 people and provide them the news. And it helped me then hone in on how, like, I started realizing that not all language is created equally, specifically when it comes to investing. That risk language is is made in a special way, and I'll be talking about how I'll be talking about that in a second. But what I ended up, I'll give you an example where, like natural disaster, if you can see this, like if I'm looking for a natural disaster, well, the news is not new anymore. The news is fit into a finite set of event codes where, like, what are the criteria that make a riot versus a protest? Well, there's certain criteria that are met that says, okay, this is a riot. And that people who are crawling the news, who have active crawling technology, that's triggering their trading algorithms based on events that happen in the news. So an example is natural disaster. Well, some of the, layers of the language, like if you look at tornado, hurricane, heat, chill, wind, storm, monsoon, those are some of the lowest level words that would indicate like a natural disaster, as an example. Um, and as I started, provided this news service, I started to get to a point where I was kind of doing the president's daily brief. I was doing, these event reports where but here was the thing. This was 10 years ago, so all I really had was the bare bones of the subjects, the concepts, the risks, international codes, the sentences, and what I called the universals. But what I was missing was the ability to knit together like the proper grammar, to have full paragraphs. And fortunately, I was in the money now, and now I know I was in the right place with LLMs, with ChatGPT, with Gemini. These tools allow me to then knit together the core components. So now I'm integrating those at the tail end. Well, I've made that software open source, and it's on this site right here, lingualint.com. a sideline objective here. The number one was to preserve indigenous languages. Um, but what it effectively did was allowed me to create knowledge graphs of the news. And this is just a representation. It's kind of like a the war room kind of thing. But the vector analysis, the sentiment analysis. So more recently, I still get 1,500 articles a day, and I had a financial advisor ask me, "Hey, is the yuan being used in the Strait of Hormuz?" And so I went to my news and I asked my vector database. I said, "Okay," and I was able to provide a thorough answer. So here's like some of the reports. None of this is actually using AI. This is all a semantic algebra that extracts these subjects, these concepts from news articles and pre-processes them to extract out the little nuggets of what are events that are happening in the news. And I'm going to jump through this a little bit quicker because it's a long report, but it's got sentiment analysis and then some kind of predictive analytics, and ultimately, kind of part of this has to do with team management. To say, if you have a risk analyst, you have a risk manager, a strategy lead, an operations team. This is kind of the Gantt chart to say, hey, go look up these subjects and keep your finger on the pulse for these different items in the news. What I recommend, because I'm not going to go into this technology that much, but is to check out the initial design. I have a short demo of me showing this technology and aggregating all of the news in a tool that allows me to look at trends in the macro. Here's the architecture of the technology and some of the initial white papers that I wrote, and then a longer demo at the bottom. And I presented this to a mathematics and cryptography club. So again, I'm trying to show less than like give advice. This is kind of what I valued over the years in what has provided me kind of thorough knowledge about what are happening in the markets. But now let's get into more specifically the concept of risk factors by looking at SEC Edgar, which every single public company has to publish their annual report. So I said, well, I know investors look at annual reports. What if I could create risk portfolios with common risk factors based on without even looking at the financials? I just want to know, like for instance, for Apple, the company's operations and performance depend significantly on global and regional economic conditions. So Apple provides products and services for the world, and the world has given them a lot of money to, and that is proof that they are, providing value, and they legally have to report what is the risks to their company and to these operations. So I basically scraped all of these, all these annual reports, and created a. Wait, do I even have the link here? Oh yeah, right here. This is like more of a proof of concept, but I utilize this in like doing like portfolios by saying like, okay, if I want to search by industry, who are all the public companies that have risk factors that are common for investment in banking or for information technology, or more specifically for the exposures, like a military exposure. If this happens in the news, which public companies would be affected? Or different event codes, as I was mentioning, extracting these event codes like soliciting support or yielding to order or a sports contest, a warning. These are, again, the news is no longer new. It's a finite set of event codes that these media companies fit like the square peg in the square hole. Well, they shave off that square peg and make it a round peg and force it into, these event codes. So, well, more recently, another theme of what I want to talk about is what AI allows for is actually delegating. It's not only that you can delegate, it's that with less money and less time than ever before, you can hire a team who are professionals in programming who know how to create tools with AI in a short time, so you can reduce the time to market and do a minimum of viable product for whatever your technology is, as fast as possible. So recently I hired a team to build an opportunity crawler, and I'm going to show a couple. This is available to all of you. There's a free trial for 14 days. I really recommend you check it out if you want, but I'm going to be showing it today. With risk reports, part of the logic that I said was, hey, hedge funds, they invest in, well, what they do is they invest in private equity like a car wash, and then they find the public company that has the same risk factors or the same financials, or it's obviously more complex than how I'm simplifying this. But the idea is, if I invest in a local car wash, I would want to short the public company that has the same risk factors, so that if my private equity goes down, if it's failing, ideally it's failing in the same way that the public company would fail. So then I would be hedging against my investment, by shorting the public company. So we built a tool that you can search in any sort of business description, and it will go search all the, SEC annual reports and find something that's the closest match to that description. So Mr. Car Wash, that's a Tucson company. That's a public company it's called the Pure Play. It's representative of, a car wash. So these reports are helpful even in my consultations when somebody says, hey, I want to invest in water desalination. I just type in water desalination and it gives me risk factors that I can immediately communicate with somebody about de-risking their potential investment, and talk realistically about, you know, for car washes, location, subscription model. If you adopt a subscription model, losing just 10 to 20% of subscribers during tough times could eliminate your profit margins. Mitigation, maintain exceptionally high service standards, or um, you'll struggle to find reliable workers willing to work for minimum wage in physically demanding outdoor conditions. Labor costs could increase. Offer above wage market wages. So this is still the initial phase. This is just in the last couple months. This is the business portion of it. The property portion is, you can type a address. Let me see if this is formatted correctly. And it will do a risk report on a property that you're looking at. And this is just initial public data. We're like expanding this out. But seismic hazard, soil conditions, wildfire risk, flood hazard, soil location intelligence, property details. One of the things we wanted to focus on was ADU eligibility, because in Arizona, ADUs are starting to be opened up legally, which are like basically guest houses. So we're interested in that, and investment analysis, stuff like that. Well, all this risk analysis is only really as strong as like the opportunities that you have available, right? This is one of the critiques, and it's a healthy pushback that I'm giving to Ken and Leo, is like, hey, in Cashflow, we're pulling these opportunity cards over and over again. I want to be able to see opportunities as often as we see them when we're playing the Cashflow game. So I have a public Tableau site where I have some different dashboards, but in IntegralMass, I have these. Oh, somebody likes this. I love Tableau Public. It like it allows you to share, analytics, and I have some fun data, like well, some not so fun, but some like what's hockey stats, baseball stats. It's good practice. Here's a little like a hack that you could do, like going to Kaggle.com has free data sets. I'm going off script for a second. These a lot of free data sets, and some of them are very fun. And if you pull the CSV and put it into your favorite AI tool and say, hey, teach me how to build visualization, like 4 visualizations in your Tableau. If Tableau is a free, there is a free version, and it'll help you. It'll teach you, how to build these analytics tool. Which I have 2 individuals who I trained on how to do this, and they both changed their employment into technology from building a public profile that then they put on their, their their uh, their resume. But anyway, so I really like Tableau Public for sharing information. But so here's some of the opportunities that are in IntegralMass. And the point of looking at this in the macro is to be able to look at the anomalies, right? So financial opportunities. For instance, this one has a low asking price and a high annual cash flow. I can immediately see it. It says it's a Mexican food restaurant with drive-through, 3 restaurants, 900,000 asking price, 900,000 annual cash flow. So that would be something I would need to follow up on and potentially, sign an NDA and be able to get, legit finances. Whereas this one would be a bad one. I mean, from the look of it, it's a $7 million asking price and it's got a $305,000 cash flow. Well, maybe it's holding on to the property that's more valuable than the actual business inside of it. The point is not falling in love with any one opportunity. It's aggregating them and using the law of large numbers to look at the anomalies. I also crawl federal contracts when I'm in between employment. I can look at who has won the contracts, right? And I can go apply to those specific companies because I know they have money. So, for instance, I think I saved one of them. Yeah, like I get an email report through IntegralMass. You would too if you had an account that has like every single public federal contract, like KT Consulting one for the Department of Health and Human Services. Um, All Valley Imaging one also for Department of Health and Services for non-professional ultrasound technology. Um, I'm just looking at a high-level view. We have commercial properties like hotel, hospitality. I'm using big data and using AI and delegating to crawl all these opportunities: land, residential, and then I'm just going to show one more view. Like here's all the sources: Crexi, LoopNet, Taxly, USA Spending. But let me show you the map, which I think is a cool way of looking at this. And this is just focused on Arizona. Like from the map, we can see like, oh, the green is the land, which makes sense because this is around the major cities. The orange, which is the commercial properties, or the blue is business. I can immediately see from the larger circle this Aztec Ranch Industrial District for 38 million. Or over in LA, it makes sense that these circles would be a little bit bigger because it's higher value. That's a single property that's worth $34 million. So in Vegas, Harmon Square. So I'm again trying to show more than tell and tell you what I value more than giving advice. But yeah, finding the outliers and kind of my side quest of tracking on federal contracts, things like that. But one of the approaches that I'm taking now is a risk-adjusted valuation. So like the opportunities, I've been showing it from a high level for a while. Let me actually show you now in the procure crawl side of this. We have all the opportunities, um, like these commercial properties, 11061 North Cotton Lane. If I go to the link, this is the Maricopa County, let me go to like residential is more tangible. So it might be Zillow, it might be Crexy. So we can see these. And the point is like, yes, I could get an account with Crexy and with LoopNet and with Zillow and all that, but I kind of like to bring them all to one place so I can kind of look at it from a high level view. And then a tool that might be helpful, which I really like promote heavily, is Notebook LM, because then I can take these links from like Crexy or Zillow, like these 3 links from Zillow that I just put in here and go, hey, you know what? Maybe I want to settle down with a girl. Like, what's the square footage? What's the price per square footage? What is the bed bath? What is the walkability? What is the school ratings? The kitchen utility, the yard sale. This takes like a minute after you put in the links. And then some hidden gaps, right? The risks, like, oh, well, the middle school performance may not be so good for this one, even though it has the highest price per square footage. Like, these are some things you can recognize. But that's some AI. This is Notebook LM is an AI tool. But let me get back to the risk-adjusted valuation. Like, running, I'm gonna jump screens for a second. If you just bear with me for a second, I'm gonna go back to Street Math and go to. I'm going to show you Monte Carlo simulation is a way of simulating scenarios, right? In this story, it has to do with a mechanic that's talking about your car going through weather and driving habits. And these are the kind of thousands of simulations that you can make with a Monte Carlo. Well, what I did with these valuations is I put in a property with the price that they're asking you for, like 1.35 million, with a net operating income of 104,000. And initially it was a 7.5% cap rate. And I go, well, the Fed seems to be putting some upward pressure on housing and a lot of other things. Why? I mean, there's theories, but it seems to be pretty obvious that the dollar's weakening and properties are getting high. I want a higher cap rate. So I'm going to run a Monte Carlo and get a risk-adjusted value and at least be confident when I'm talking to somebody and saying, look, I know there's a gap between what you're asking for, but you might have market downturn. You might have tenancy vacancy. You might have environmental or structural issues. Yes, there's ways of mitigating this that I should know, but I'm going to come in at 1.195 rather than 1.35 and explain to you what the gap is between these two numbers. Well, my point in this is more of a sense of look at this map. If I do the cold call and come in with the risk adjusted valuation on all these, I mean, even if 0.01% of these of these people that are willing to go for that renegotiation, um, there's a lot more opportunities out there. So being able to use big data and AI to be able to help you pull the data and visualize it. Like, I'm trying to not fall in love with any one opportunity and also utilize risk analysis to simulate market downturn, things like that. So even if 1 out of 100 accepts the mathematical reality or simulation, that's a dangerous road to claim that the simulation is real. But the crawl was worth it, even if one takes it. So this does anybody have any questions? Because I'm going to start shifting a little bit more into kind of like the philosophy of where I think the markets are going. in terms of there's a lot of AI hype right now, and being in the space for about 10 years, I think we're headed somewhere. But I don't claim to know for sure, but yeah. 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 You're totally on track. So like you can find a lot of these tools I've made available to everyone, and this is not supposed to be a sales pitch. This is just me putting forward my humiliated self to show you like this is available to you. Jefferson.cloud is kind of my initial source, and then like under projects is kind of where the open source code and all of that is, and then specifically more recently the tool IntegralMass, integralmass.com. I've made like a free trial to have access to those cards, those opportunity cards, which is in the dashboard, and we're crawling these opportunities for you to look at. Yes. Yep. Yep. Yeah, commercial, residential, land, and then my team we forgot to. There's no problem. It was my fault. We forgot to split out the procurement contracts, which are like basically federal spending that's going on. They kind of look like this from the email report. It also sends a daily email with like the top ones for the day and the week. But you can also see like Department of Interior, Department of Treasury, Department of Forestry. Like they have the winning companies or the winning contracts. So if you work, if you labor for a living, if you're in the rat race, then like maybe these companies would be good ones to apply to. And that kind of I'm really, thank you for asking a question, and it allows me to lead into the concept of passive cash flow, right? And that's the idea of the game is to have passive cash flow, which is where I'm going to read off some things. Basically, I meditated over a holiday, and I basically realized that like finance is relationships, that passive cash flow really means like majorly relationship. So like having a financial advisor, having a lawyer, having an accountant is part of the team that helps me, that I really value in having passive cash flow. Like partnering with the big brains who are doing that day trading so that I don't have to use up, my RAM, so I can focus on technology and role specialize is part of how I operate. And the big brains who are doing the massive portfolios who who aren't focusing on just one stock, like maybe SpaceX. They're focusing on the covariance across the whole portfolio. If I can trust my money with a relationship that I trust, then they can, and it's turning out nowadays it's really just keeping up with inflation. But my point here is what I've learned about active management. Hypothetically, active management of an investment like a business, or that I know how to operate. right? I should be able to operate it, like kind of like the richest man in Babylon, like don't invest your gold in something that you don't know how to operate yourself, kind of thing. Is where I've learned, like where I've been kind of humbled um, about basically realizing I can't do it on my own. It takes a team. It's part of what Ken and I are trying to cultivate with bringing us all together to keep the conversation going. But passive cash flow buys back, time, memory, headspace, and really this is a nod to like there are some big brains out there and some white beards out there who know how to like do options and do the day trading. And I've read one full book, academic book on options, and when I closed it I go, wow, this is a lot more certain than I thought. But it's a nod to the big brains out there, and that I've trusted my money with people who are handling way bigger accounts than I am, but I'm still using that same portfolio, distribution for. So reach out to your network and try to see who, your relationship. Anyway, I'm again trying to stay away from advice, but Notebook LM, the future of digital twins. I want to show you something that is really a hot thing right now, which has to do with NVIDIA, as we all know, is like the highest valued company. They're bringing back what has been drained from our country, which is manufacturing knowledge and manufacturing data science, productivity, right? Like they're starting to do like digital twin technology and making marketplaces for you to use AI for basically simulating your entire manufacturing plant, placing it on Google Earth where you would want to build the factory, and then getting into the product lifecycle management of the products that you might want to manufacture. Again, that active management of your investment is it's ideally it would be more fruitful if you're actively managing. But that's a balance with the passive cash flow to actually get out of the rat race. But while still got energy, um, but my point is that there's something to watch out for. This is a little bit more my point here, which is the productivity paradox. And I see this thoroughly. I met with IBM the other day, and it was like a South Park episode. They're like, I was like, man, are you guys like just investing in like chatbots? And they're like, well, we beat we beat Jeopardy. I was like, come on guys, everyone forgot about that already. And they're like, it was a fun time. We're totally iron sharpens iron. But like this idea is that despite the rapid development of information technology, there's a slowdown in productivity growth, right? And in times of like recession, in times of potentially when the Strait of Hormuz, we actually see after the futures contracts are all closed out on keeping prices about the same, we might see a downturn, and it's things like Coca-Cola and infrastructure that might be more recession proof. I'm not giving financial advice, but I'm saying that there's a lot of greed in the eyes of businesses, and with the quantitative easing, it allows for more cheaper cash to be able to invest in. And if our S&P 500 is currently having gains because of AI, it might be time to pay attention to like productivity. Maybe it takes shooting for Mars to land on the moon, and maybe it takes the greed of trying to leverage AI for everything, AI for sports, AI for medicine, AI for, but it's becoming a little bit of a loaded language. And yeah, I mean, I've social media plus, so I've been, consulted a couple tech startups, and I have some buddies that invest in tech startups, and it's been, social media plus Maslow's hierarchy of needs for almost every tech startup. I'm being dramatic, but social media plus food, social media plus shelter, social media plus sex, social media plus transportation, has been a huge focus in like a lot of tech startups. And then they're chasing that unlimited valuation by prioritizing brand awareness over actual profit. So that again is like, if everyone knows what Apple is, well, Apple can leverage their brand awareness for actual money. So that kind of bubble of like intangible assets has been something that, so my solution is like focusing on investments that actually solve the productivity paradox from what I majorly focus on. But again, the evolution of my understanding, kind of, I'll finish on this, is like an ounce of gold has always been the price of a good suit since Roman times. Like a nice toga has always cost an ounce of gold, as it did in the 1920s, as it does nowadays. A good suit, or an ounce of silver has always been an honest measure of several hours of good labor in your community, in your neighborhood, in your family, with plumbers, with electricians, with mechanics. Are they going to start accepting the hard metals? I'm kind of preparing for a bimodal economy with like Fed coins, stable coins for like the taxes and the operations, right? We guaranteed death, we're guaranteed taxes. As an operational store, I still have to use Bank of America because it's so practical to be able to, transact. But maybe like tangible metals or Bitcoin, whatever you think, like is like a measure for like true community labor. And but anyway, so I'll have a closing thought is like leveraging AI for scale, but anchoring investments in physical reality. It's that digital world like is getting more and more metaverse, more and more hooking yourself up to the games and the wizardry. So that's my presentation. Hmm. Yeah, integralmass.com. Hmm. Sure. And on the meetup, I added all the links in the read more section, but I really thank you for asking. I'm going to put all the links right now in the chat. All the links that I just showed, I just added to the chat. And one YouTube video of demoing that news scraping. If you're interested in maybe like approaching me, for like if you're interested in like how do we start metabolizing the news? Like this is getting ridiculous. I have open source code, and I can we can talk about what basically got me into AI was natural language processing and scraping the news and all that, and then like LLMs came out which helped me finally knit together those event code extractions. So there's a YouTube video with me demoing that, but all the links are in the chat. Great. Yep. Yeah, totally. Yep. Yep. No, I appreciate you all being here. A nod to Ken and Leo for making the space, holding space for us to kind of share. So, thank you. Hmm. Cool. That's cool. Are Eugene? Are you in Phoenix? Oh, I'm in Chandler too. Sweet. Okay. Feel free to reach out. Yeah, my email. I'm sure you can find it on my links, but I'm just going to include it. But yeah, and if you want to, I don't know if you've been, but come join the Cashflow games.